Welcome to CNBC Africa Special. I'm Dumisho Greater. Now, the World Economic Forum on Africa 2014 is well on its way, seeing world leaders, heads of governments and international investors from around the world gather in Nigeria, Abuja. We're about to cross to Abuja now, where a panel of expert guests will look at how investment can drive diversification, inclusive growth in Africa. The topic for this debate, Africa Investment Outlook. More on that next.
I wanted to follow up on just a few things you said about kind of being a pioneer in some harsh territories, as some might see it, for those that don't live here. Some of the laws and regulations in these countries are highly protectionist. And how do you navigate through them so that you're not seen as an exploiter? How do you come across as a friend of the country that actually wants to do good?
Well, of course, we are driven by profit and loss. That's the fact. But can you really be a good human being and do something good for the people? I think we should. But everywhere we go, we try to find local partners. We like to use friends and create a relationship and let people invest with us in these countries. But at the same time, we make sure that we use local contractors, local suppliers, local staff. And all, we operate in 14 countries. Every single country is fully operated by the local themselves, and they do an incredible job. I mean, we have an operation in Egypt. I tell you, in Egypt last year, with all the trouble in Egypt, we only worked 11 months, not 12 months. Our total sale was $1 billion US. The last 3 months in Egypt, we went up 30%. So keep watching the bad news. I'm doing the investment and I'm making the return. Yeah? So what I'm trying to say is that I really think we should be responsible. Not responsible to be responsible toward the society, but should be also responsible to do a good job. We should do the right thing. Of course, you'll contribute to employment, you will contribute to promoting the city, you'll create trust in the development. While you're developing, you're highlighting the countries that you operate in. And if you can do some other good while you're operating, I think you should do it, and you should be responsible. We are making good profit, but remember, we're growing and making double-digit returns, right? So we should be good to the society and every element and every side of it. I don't know if I answered the question.
Sure, go ahead.
I think the question of morality in investing in Africa often comes up in relation to China. Mm-hmm. One example I like to use is the DRC. Many people who don't understand the African investing environment today, China investing in the DRC, and they say, how could the DRC accept China's infrastructure for copper deal, which was effectively China saying, we're going to invest $9 billion. It went through the IMF approval process. We're going to invest that against effectively infrastructure that will get the copper out, and that copper would then be effectively exported back to China. In the process, we will beneficiate the copper in the DRC. So that whole cycle was frowned upon because effectively it was China exploiting the DRC copper resources. But the fact is the DRC, which is $4 billion budget per annum, half the Ivory Coast's budget, much needs that investment. And so the fact is that China making that investment effectively liberated the ability of the DRC to get that copper out of the ground, which otherwise people would be happy morally, but otherwise it would be in the ground. It wouldn't actually be developed. Simply, I just wanted to say, I think DC touched on a point I think is really, really important, is that Africa is not just a natural resources story. There's one of those myths about Africa and investing is that it's just a natural resources story and people are exploiting the oil resources of Angola and Nigeria, or the copper of Zambia, etc., etc. Well, the fact is that Africa is as much a consumer story, a demographic story, a population growth story. And the urbanization that is happening in Africa is going to mean that the basic infrastructure services, financial services infrastructure, telecommunications infrastructure, consumer infrastructure, beer, everything is going to explode. And there's a very good McKinsey study that was done which talked about the demographic story, the population story. And what you're seeing with the ShopRites, what you're seeing with Heineken in Nigeria, a variety of these companies, is just absolute huge development. And I think the multinationals have got this. So I think that I've detected that in the last couple of years, but it's growing in pace. Multinationals across the world have decided that Africa is a place that they have to double up their investment. And so whether it's a GE, a Procter & Gamble, a Unilever, a variety of companies at different stages of development in Africa, they really are now paying a lot of attention as to how to capture this demographic story.
Speaking of the consumer story, Mark, how has the African consumer changed their behavior?
Well, I think the great thing to remember is that Africa's now got 50 cities of over 1 million people. If you start looking at the segmentation of the 1.1 billion sort of working people in Africa that's going to be by 2020, what you can see is very clear sort of strata between the people who are obviously still very much in survival mode, which is about half of the population. But you've got aspiring families, you've got people who are coming into the middle classes, you've got professional people, and you've got a small band of very actually rich people in Africa who are actually driven by, for example, demand for luxury sort of products. And so, as Colin was saying, I think what we see is that and again, think of the parallel of what's going on in China. China is talking about how does it move from an investment and savings economy into how does it sort of grow domestic consumption. This is all about balance. And as we sort of want the emphasis on infrastructure, also what you want is domestic consumption to rise within individual countries. As it rises, you've got to be able to target products and services to the specific segments. One of the big challenges in Africa, particularly, is supply chain. Is how do you get, whether it's food or agri-products, from the land into the cities. But it's also how do you get the consumer goods into the cities. And the last mile issue is going to be a huge investment challenge, I believe, for many of the consumer goods companies. And that's where things like using mobile payments, digital technologies, I think ultimately will help sort of drive consumption and consumer patterns. So I think that as we talk about the infrastructure side of the equation, I think it's really important that we balance that up by thinking a lot about how consumption patterns are going to change. There is distinct segmentation occurring in Africa, and I think there's huge opportunities, particularly if you look at those 50 cities of over 1 million in Africa.
Thank you so much. BC.
Yes, I wanted to say that whilst we continue to think about the big multinational institutions coming from outside of Africa into Africa, we've got to accept that they have a role to play. But what will change the economy of Africa and increase financial inclusion and bring the less privileged into the economic bracket would not be the multinational institutions. We have to look inwards and see what can we do that would create enabling environment for small and medium-scale businesses in manufacturing, in services, to thrive. These are the ones that will provide employment for 20 people here today. In the entire banking industry in Nigeria, the total number of employees is 80,000 people, and that's a big segment of the market. So we've got to realize that, yes, the foreign institutions will come, and we need them because of the multiplier effects of what they do, but you can't do that in isolation. We've got to solve the problem of making sure that we engage the youths. Now, how many people will these multinational organizations employ? Now, we operate as a bank in 5 different countries outside of Nigeria. And the story in each country is such that we are amazed by the opportunities. And we just begin to wonder how long it took us up to this time for us to come into those environments. Yes, there are infrastructural issues in Africa, but those are, in fact, opportunities for investments. You can imagine if we get rail transportation right, because you keep talking about power. Power comes to play. People produce. What it takes them to transport these things to the end consumer is enormous stress. So what I'm saying is, as governments in Africa, we have roles to play. We have to be able to transmit the resources we have into areas that will enhance productivity and generate employment for the masses. We keep churning out graduates from institutions. And some of these graduates read marketing. And I know that in marketing, you do a research first to understand what the market wants before you produce what they want. But here, the universities just absorb graduate students into courses they have without looking at what do we need in the economy. And I think we have to go back to all of these things to make sure that the population that we talk about, going to 1.1 billion, would not be a problem for us in the future. So I'm not saying that we don't need big multinational institutions, but they won't solve the problems for us. We need to look inwards, both from Nigeria to Cote d'Ivoire, wherever it is. We have to work inwards and engage ourselves. We have equal income inequality and redistribution. People are ready to invest, but sometimes we need to open up the environment, the economy, and remove the impediments to business so that people can come. The likes of people coming into Africa today are still the big institutions. You have medium-sized institutions that can still add a lot of value, that are still staying back because they are not convinced yet. So the enabling environment has to be right, the rules and enforcement rights have to be improved upon, and the governments also have to lead by example across the whole of Africa.
I want to ask, what is your bank doing to extend products to those that were previously neglected?
I think First Bank leads the Nigerian environment in doing that. We have mobile money products, which means that we have products targeted entirely at people who do not have bank accounts, and they don't need to have bank accounts. We call it First Money. Simply by having a telephone number with a GSM number that has a unique number, that becomes a unique identifier. And it's done so well that I'm very happy to say that the Bill and Melinda Gates Foundation just gave us $8 million as grants for us to, after doing due diligence and just to make sure that we use that to deepen the market penetration. We have the largest branch network here in Nigeria, going to about 800 branches. It's the biggest branch network. We have the biggest retail franchise and network. So if you compare First Bank with the others who are just niche players, you will give it to us that we've done a lot, and we'll continue to do a lot.
Thank you. I don't know if anybody else has any more comments to make on the panel before I open it up to the floor.
Maybe I would just like, to give something more to what has been said in the changes of consumer in our countries. When we gained the independence in the early 60s, there was, let's say, 70% of the population living in rural sector. Now, the case in Cote d'Ivoire, 51% of the population live in urban area. So that's a big change. I take another example. Mobile phone was introduced in Cote d'Ivoire in the mid-90s. There was about 100,000 consumers. We are 24 million people living in Cote d'Ivoire. Now we have 20 million subscribers.
No.
You see the change?
No.
That's it.
Does anybody have anything else to add?
Well, just linking those, take Mozambique as a very interesting country because it's got 80% of its people working in agriculture, but that only represents 30% of the GDP. And what you see in Mozambique, I think, is this ability to look at agriculture and digital corridors, development corridors, to try to look at how you can help use the growth in things like mobile subscriptions, the M-payments, the providing information to farmers to help improve the productivity on the land as a way of, if you like, combining some of the core needs around agriculture with modern-day technologies to accelerate sort of growth rates. And I think that that's what we're going to see more of in Africa going forward. So it's about how you join up, how you integrate. I think some of the opportunities Africa's actually got to leapfrog, I think, what's going on in many other parts of the world.
I'd just like to add that from my own experience and from studies that we have done, I haven't seen a foreign institution that has come into Nigeria and I guess some parts of Africa and have packed their bags and left. I just think that, no, and that is true. We know some of these multinational institutions who, even when they make so much profit, by way of dividends, they take them out and they keep smiling to the bank. And I'd just like to say that this is the right time for anybody to come in. Institutions and organizations are already taking positions. We have government divestment of assets in various sectors of the Nigerian economy. And I just guess that if you don't do it now, it might be too late. Mohammed mentioned about taking position in his own company 17 years ago and is reaping the rewards today. So if you don't take those opportunities today to come and invest in Africa, some other smarter institutions, he's here. I'm sure he's not here just for the World Economic Forum. He has told us he's going to some other parts of Africa. He's investing, taking positions. This is the time to take those positions.
I just have one comment to make, and it can be a question. It could also be a comment that the audience can react to. spoken about agriculture being one of the major drivers of Africa's growth. We talked about the informal sector, we spoke about the youth. However, when we speak about these demographics, the majority of these are the 51%, which are the women. So I'd like to hear what your thoughts are on how inclusive growth can benefit the majority, which are women.
Well, maybe I can come in, and it touches basically also on what BC said earlier about small business. The Goldman Sachs has this 10,000 small business, 10,000 woman initiative that's been running for quite some time, and Africa's been at the center of this initiative. I had the joy of presiding over a couple of the graduation ceremonies of these women that had been effectively organic small businesses that had gone through a semi-MBA 6-week program through Goldman Sachs, twinning with universities. We did that with the Lagos University, for example, in Nigeria. And then when you sit with these women, you talk to them about what are the biggest problems that they have in developing their businesses going forward. And obviously skills and development is part of that, and they found a lot of benefit from the 6-week course. They talk about the infrastructure issues as their biggest obstacles. So they say the single biggest cost outside of labor for these small businesses in the 10,000 small business group was power infrastructure. So the cost effectively of electrification for their business, and that is the reason of the cost of diesel in Nigeria and the need for diesel-fired power. So if we were able in Nigeria to effectively build the power sector, and I know the government is undertaking reforms, but they have yet to execute effectively on bringing that to market, growing the power sector, and bringing the price of power down. Those are the ways in which actually these businesses are going to be practically affected and encouraged. So I would just say what we saw with the 10,000 small business initiative was fantastic entrepreneurial capacity, fantastic initiative, incredible women that were driving effectively these businesses that were the only source of income for them. But they need a lot of help in the society to get those businesses to really hum.
I have 3 daughters, and my youngest is 22 years old. And I'm not joking. 4 days ago, she was sitting with me asking me some advice. She does some designs and she sells on the net. And I said, no, whatever you produce, if it takes 3 weeks to satisfy your customer demands, why don't you produce some stuff, keep stocks, take a little bit of risk. But let me ask you this, before you take any risk, how much do you have in the bank? She said, $300,000. I said, how much did I give you to start your business? She said, you didn't give me anything. What I want to tell you is that, first of all, we in the Middle East, supposedly where women have no right. Men have lost. They are educated, they are aggressive, they are strong, and even if you look at, I'm sure, universities in Africa, you see the percentage of women who come out of universities is astonishingly so much higher and better quality than men. Because of that, I think women's place in the Middle East and in Africa, I don't know about the rest of the world, India probably, is really going in the right direction. And we see it, I would classify that we in the Arab world, maybe in the stable Arab world, which not many, I would say that maybe we are 7, 8, 10 years ahead of Africa. And education have changed women's position, women's strength, ability. And listen, I think women are just so much more hardworking than men anyway. That's why my mom, I'm the eldest of 13 kids. And my mother, till the age of 16, we didn't have running water or electricity, and we all made it. So I just want to say that the strength of a woman and the quality, and not the quality, but just the effort in education in all governments, I really think that this is automatically pushing women up.
Vimbaye, let me step in to say, when we talk about women empowerment, we should define it and define it properly. I agree with Mohammed. For the very well-educated women, they don't want you to tie the hands of men for them. They can take care of themselves, and they do. In the corporate world today, you don't give undue advantage to women, but they rise to those positions. I think what has changed and what is making that effective at that level is because of education. Unfortunately, the most important factor towards bringing up the status of women in the society is not the rights that you set for women, but education, education, education. You are here today. I don't know why you have only all men panel.
Thank you so much.
About
Thank you so much.
And that's the reality. But that's not because there are not enough qualified women to be on this panel. Let's deal with the issues of educating our girls. And let's bring it back to the issues on the table today. The whole world has to accept that this challenge that Nigeria has is not a Nigerian problem. You can't educate women if you are discouraging them and frightening them from going to schools, which is what is happening in some small part of the country today. We all have to come together to say, whatever the impediments are to properly educating women and girls, we all have to work together to fight to remove those things. When we do that and they have equal opportunities and rights to education, they will compete and in fact beat the men. That's my own opinion.
Well said.
The audience, we would like your opinions, please.
Maybe while waiting the audience. Well, what I would like to add as far as women are concerned, well, in the early 60s in Côte d'Ivoire, when you go to wedding, the mayor would say, we give a leaflet, family leaflet, to the man, saying he's the head of the family. Now, that's not the case.
Interesting.
Different. Well, and when we go, you give, my banker is here, when you give credit to men and women, the reimbursement rate is higher with women than with men.
That's correct, yes.
Okay.
So women are a viable business.
Yeah.
Oh, yes. Very good. And much more honest. Until they come under pressure from the husband.
We have a question from the audience member here. Please, can you state your name and where you're from? And who your question is directed to, please.
Johannes Mipep. I'm with the Yeshi Group, and I'm based primarily in Ivory Coast. I'm going to take a step back and ask a question. We were talking, the subject, the panel started with the question of integration and whether or not there's real integration or not in Africa today. Does this work?
I think your voice is loud enough. Yeah.
So we were talking about whether there's real integration or not in Africa. And the question I want to ask the panel really is, are we talking about public sector integration or private sector integration? Because for me, using the ECOWAS, the French ECOWAS zone as an example, which is probably the only real integration in Africa today, outside of that, we're talking about private companies like myself that work in multiple countries. South African firms that are all over, Moroccan, Nigerian banks migrating into different economies now. For me, that's integration. I think the public sector has been a little bit lagging. And I think that the real talk should be, how do we get public sector into this circle or discussion and integration? Because again, the French West Africa is quite integrated. But when we go into, I look at East Africa and Kenya and these places, and you have certain companies like Tiger Brands or Diageo or what have you that are involved in multiple economies. But the different economies do not have any laws that allow, for companies that are, let's say, African to migrate and have certain advantages. I want to get a thought of everyone here.
Okay. We've
East Africa is integrated. Yes. Can I just...
Well, I'll say quickly, in French West Africa, for example, there's a simple common law between, I believe, 8 countries. So if I set up a company in Senegal, I have the same common law in Congo, or in Ivory Coast, or in Togo, okay? That, for me, is real integration. And there's also a common currency. So I don't have losses in transaction. Whereas if I go to Kenya and I go to Ethiopia, it's I don't want to say the Wild West, but
Do you still want the microphone?
and I think unfortunately, I think that economies lose a lot out of that. You know, I think this divide and conquer is kind of, is there.
Yeah. Let me just. Thank you very much. My name is Joseph Mora. I look after the KPMG business in East Africa, which is one region. We have a business in Kenya, Uganda, Tanzania, and Rwanda. And the 5 countries, Kenya, Uganda, Tanzania, Rwanda, and Burundi, operate as one economic region, one passport, and goods moving from one place to another. And we've got actually even tax laws being integrated. So we can have this private conversation outside about who is more integrated, but yes, we do have a recognized integrated region.
You have some level of integration. Okay. Okay, we'd like to, over here.
That's my governor.
My name is Jugunado. Okay. And I wanted just to come back and say, you know, the session was about investing for inclusive growth. But we really needed, I think the conclusion that is coming from the panelists is that, look, growth creates opportunities for investment, and investment drives growth, isn't it? But have we made a case for inclusiveness? Where does inclusiveness come in? And my take, and I can see the bank, and this is what we have done on financial inclusion, is that access to market is one of the inclusiveness. Allow citizens to participate in the economy, and then they can sell their products or even their labor into the market. But if you don't allow that, then obviously the inclusiveness starts coming up. But that's one aspect of the story. Let me go back and say, since the conclusion is that growth is driven by investment, who supplies the investment? This is where the story starts. Because we need to make a difference. It's only the public sector and the private sector who can supply the investment. But let's go back to public investment. What is it for? It is actually to lower transactions costs, because farms and even households in Africa are very transactions heavy, and transactions costs are very high. So essentially, if public investment invests in lowering transactions costs, then we can see we enhance the profitability of private investment and accessibility to the market. Then finally, the story is not complete, because it's not growth itself that is going to create this inclusive growth. We have to have targeted intervention programs for sectors and even regions that are going to be lagging behind. Because these are the realities we have in Africa. We have to come up with targeted interventions for either specific sectors of the market or even specific regions, because we cannot assume that we will match at the same level. Maybe this is where the case for policy intervention comes in, and the case for investment in terms of lowering transaction costs. Thank you.
Okay, in that case, panel, will you please respond?
Yes, let me respond to the question on integration. And let me say that it's not really critical that governments are integrated in the large format in which he expects it to be. What governments need to do is to find means of working together to bridge the challenges that exist that make it difficult for trade to flow between economies. And unfortunately, sometimes because of the myopic views of some of the governments that we have, the major reasons why they fight this integration is because of the revenues they lose from taxes and import duties. Why won't you have a free economy across West Africa? Why do people still need to pay import duties, export duties to move goods across? But because we rely on the import duties. The role of governments and what governments should do is to look at the enabling laws, the tariffs, and do everything that is needed to be done to make free flow of goods and services across those regions. The example of KPMG in East Africa is good, but it may not be a classical example, because really when you export services, you don't go through governments and so on. But for goods here in West Africa, it still doesn't happen. And I think that's the role that the governments need to do. Why are we not able to move freely across borders without having to pay something? On the issue of inclusion, and I think I touched on it, it's not a fancy thing. We need to understand in practical terms what we need to do and what kind of inclusion we want. The problem we have today is we have a population of very young people who are not engaged. So the kind of inclusion you need to talk about here is how do we make sure that government spendings, we make a lot of money from extractive industries. Governments make monies, but these monies are spent sometimes, and I'm not just talking of one country, across Africa, on white elephant projects. We need to spend these monies on things that youth need for them to be engaged. Unfortunately, we may not be right. We may be thinking of this generation as in a different manner. They don't want to work. When I say work, they don't want to do white-collar jobs. They are very creative, they are very entrepreneurial, but the impediments for them to move on well are things like education, electricity, infrastructures, and so on. If you fix those things, you'll be shocked at what this generation will do. And I think in terms of inclusion, what I mean, the solution is for us as organizations and as governments to see how can we engage them. It's not giving them money, but removing the barriers and impediments to let them express themselves. You spoke about your daughter. It's because we have an environment to express herself. Everything she needs to grow is there. And we all have children, daughters who don't want to work, but they're very creative. Let's look at how do we engage them to become useful to the society. It's not a complex textbook type of financial inclusion that we're talking about. That's my comment.
So let's just build on that, because I'd like to actually link the words integration and inclusiveness together, because I think too often we have this discussion and we look at it through as leaders, through our macro lens. So we talk about trade policies and we talk about how do we link things together across borders, and we talk about infrastructure. I think it's very important to look at it through the lens of individuals, and that very often comes back to, I think, issues around demand and supply. And I think increasingly we're going to be looking at, if you like, groups of consumers across geographical boundaries because they have common needs. They may be separated physically by geographic boundaries, but actually there's common approaches to demand. And also we're going to see common approaches to the building up of individual skills. And so I think one of the answers to inclusiveness, as we were sort of saying, is that Africa has probably the most entrepreneurial group of people on the planet at the moment. That is what people's individual desire to improve, the ambitions they've got to better themselves, is what is going to help. So you can look at demand, you look at supply opportunities, you take it through the lens of individuals, and then I think part of the responsibility of the leaders and the policymakers is to say, how do you enable that? What can we do at the macro level which provides, if you like, that bottom-up momentum to create, if you like, that sort of space for people to grow? That sometimes needs I think the initiatives that you were saying, those sort of targeted interventions. But too often we're basically looking at it through a top-down macro lens, not thinking enough about how we support people bottom-up to go to the next step at whatever level that is, to be more ambitious and to step up.
I just want to add one thing. I think what you said is so valid. I think if governments provide the infrastructure, hard and soft, while education is in the right place, I think we have a good chance of moving these kids forward, because, by the way, they are connected to something called the new world, which is basically the internet, and they believe in the new God, which is Google. That's the new God, right? So these people are at high IQ, motivated. You don't believe how much can these people do. Now, of course, some of them are a little lazy and all that, and just like my daughter, she does her jewelry design. She emails it to her PA, who, by the way, sits at home, doesn't have an office. They send it to the manufacturer. They get their stuff. They go to 4 or 5 functions a year. They do business completely so crazy compared to what we do. So, but at the same time, we in the private sector, in these developing countries, I think we are not fair. We profit so much, double-digit growth and all that, but we don't do enough. And I give you an example. I sit on Seattle University, Catholic University in Seattle, Washington. 30% of our tuition, when we give scholarships for kids who cannot afford to go to our university, 30% of the kids are kids we support through the university, which means that we take tuitions from everybody, but actually 30% of it, it's going for kids who need to go to school. And that's happening everywhere in America. That culture and my company, how it's going to affect and create a fund, a special fund, say I'm in the real estate business and engineering and construction, and really put time to support 100 people, 1,000 people, and you support 2,000 people, I think it creates a culture of supporting while the government must be responsible to do the right thing from hard to soft infrastructure.
Mr. Prime Minister, do you want to?
Okay, well, as far as integration is concerned, I think that, as that has been mentioned earlier, we have done a lot in the Francophone zone, as that has been mentioned earlier. But we are working hard as far as ECOWAS is concerned. I think by 2015, that's next year, we have a common tariff barrier. Okay? And in 2020, we have this single currency also, as far as ECOWAS countries are concerned, as that has been done in the Francophone zone. So we are going ahead. I think what also is important is the infrastructure. For instance, for the roads. We are working to have a highway going from Lagos to Cotonou, and then Lomé, Accra, and Abidjan, 1,000 kilometers. There are 30 million people living around. If you do that, integration will go faster. Because since the Middle Ages, people make transactions across the border. They need means to circulate. So I think we have to work hard on it. It's not normal that if I have to go to Abuja and I have no plane, sometimes I have to go to the north and come in to Abuja. Since they've been changing because we have some airlines now. But if you have roads and railway, that will change things. So the finances, you have to finance that. Thank you.
I was just going to comment. I think there's a strong relationship between growth, integration, and inclusiveness. I just remind the audience on growth, because we started off in that place where I said growth is a necessary precondition, perhaps an insufficient precondition for inclusivity. But we're 3% of the world's growth and 15% of the world's population. Now, we're not going to be 15% of the world's GDP and 15% of the world's population, but we've got a long way to go. So we're coming off a low base. So we've got to work on economic growth for sure. Second, on integration, there's many layers where the public sector and the private sector interface. But I think we've got to be practical. Where are the friction costs in doing business? Much of that friction cost is in things like that BC was talking about, payments that have to be made at border posts, delays at border posts, insufficient infrastructure to deliver people and goods. We've got to work on those things to get much better at that, and that's not just in one or other part of Africa. I think it's throughout Africa. I'll give you one practical example. One of the CEOs of the major company, a South African company that does business across Africa, told me that he has major problems getting expats who are sufficiently skilled to manage the retail stores that he's building around Africa. And just getting the permits, he has negotiated with certain countries that for every $1 million that he invests in capital investment, he wants to have 5 work permits without any questions. So you can take 5 people for each $1 million that he invests. And he's talking about billions of dollars. So he's talking about important skilled people going into those countries and helping develop that infrastructure. So I think we need to be practical about removing those friction costs. The last thing is on inclusiveness. There are many layers, again, of inclusiveness. Obviously, education, youth, technology, internet, and we have very poor internet penetration in Africa as one example. We have very low levels of research and development, even though, as Mark Spellman tells us, we are leapfrogging technologies with payment systems, mobile phones, so on and so forth. But the one area, just as an example that hasn't been mentioned, is equity capital markets. The fact is South Africa has an $800 billion equity capital market. The next biggest is Nigeria with $77 billion. We trade $2 billion a day on the JSE of liquidity, and we trade $30 million on the Nigeria Stock Exchange. The practical reality is that outside of South Africa, there is no real liquid, deep equity capital markets in the rest of Africa. So for us to be able to distribute the benefits of business to Africans, they have to be able to buy these stocks in a much more transparent, liquid way. And if you buy, you want to be able to sell. And so the fact is, Angola's been talking about an equity capital market for years. We don't have many functioning equity capital markets. One of the big things when you look at China is that it managed to develop through privatizing and state-owned enterprises, not selling off control. What they did was effectively sold off 30% of companies like CNOC, the banks, the oil companies, the construction companies, and so on. So they still control it through the government appointing the chairman of the companies, but they've modernized the state-owned the state-owned enterprise infrastructure, and through that they've actually put the equity of these companies in the hands of Chinese people and created a liquid capital market. If we just did the same, take Angola, they have Unitel, an incredibly profitable company that if people could buy into it, it would be fantastic. Sonangol, oil company, huge oil company. If people could buy into that, that would be fantastic. I'm talking not for international investors, yes, for them too, but for the local Angolans. Yeah. And so if we just did that one project in terms of inclusiveness in Africa, that would be a huge breakthrough.
Thank you, Colin. Sarah?
Good afternoon. My name is Saran Kaba-Jones. I run a clean water and sanitation charity. I'm also a young global leader. WEF prides itself on gender parity, so I'm quite disappointed to see that there's not a single woman on this panel, but I'll take that up with them. Most governments have failed when it comes to providing basic social services and infrastructure, and it's become quite popular to champion private sector as the solution to Africa's problems. But it's clear that private sector is not the only solution either. So what role does social enterprises and civil society have in reducing poverty on the continent and also bridging the inequality gap? And should private sector partner with these groups who are better positioned to address some of the continent's most pressing social issues, which would in turn benefit the private sector? Because we talk about education, but the government has failed in that department. Private companies are not going to build schools. So what role does civil society play? And do you see a partnership so that we can fix these problems? Thank you.
Let me start by saying that any institution, and because you spoke about the private sector and what roles they play, it has come to a level today where any organization, private sector, that ignores the powers of the social media does so at its own peril. Marketing, presentation of products and services these days are in fact moving faster through the social media. I did mention that we do have a generation of young people today who probably think are lazy, but they have their own ways of doing things. Everything they want to do is done comfortably in their homes with technology in their hands. And so even if we choose not to do anything, it's a revolution that is spreading and spreading so fast. So I agree with you that it has a major role to play. Wise organizations, including First Bank, are beginning to use the social media as a form of engagement to drive behavior with the youths. Products and services are now put and presented to them on the social media, and I think they are beginning to understand that you can't ignore that medium as a means of communicating and engaging with them. We also find a means to. Something happened in one of our branches. Something very, very, very small. And believe me, in 5 minutes, it went viral. And that tells us that you cannot afford to ignore them, and you can't afford not to engage them through that medium. And it's beginning to happen and happening fast. Now, whether governments are beginning to do that in the manner in which they need to is a different thing, but it's something that you are right, we can't ignore.
The role of the government in engaging with institutions. Your thoughts, Prime Minister.
Maybe what I would like to add is that education, the private sector, intervene in the education. In the case of Côte d'Ivoire, 51% of the students in higher education attend private school. Okay? So I would just like to add that. And, well, you are right, the civil society has to be organized better than they are now. So, well...
How are they disorganized?
Well, they have, you have to help them, but you have to let them to be free. Because if they are ruled by the state, that's not efficient. But you can give some subsidies, if necessary, at the beginning. And, I think they can help in different areas. Political sector, for instance, but also social sector. Sometimes when you want to give subsidies to the farmers, they are more efficient than the government. So, it must be a win-win game between the government and the civil society.
And does Côte d'Ivoire provide that freedom for the institutions?
We try to do it, but ask them.
I was going to say, I think one of the trends that I see is organizational boundaries are blurring. And so, in fact, I think that what you're actually seeing, many larger companies are actually trying to, if you like, develop social entrepreneurs within them. And you see a lot of initiatives coming out of the bigger companies. So, to me, I think one of the interesting things is actually how bigger companies are trying to do initiatives and encourage their own sort of staff to be social entrepreneurs within it. At the same time, big companies need to work with smaller organizations to make things happen. So you see that sort of dynamic happening. And I think maybe one of the sort of key recommendations that I would say is that what I think we need, particularly amongst the sort of the politicians, is actually maybe more secondments into business and into social entrepreneurs, so they actually see some of the practical things that are happening on the ground. And as someone who's married to a politician, I understand something about the language issues that exist between sort of business people and politicians, and the importance of actually getting not the sort of the language to go past each other, but to really sort of connect it up. So I think that social entrepreneurship is something that's really important. And we had some great examples this morning with the awards. And I think it's about how those sort of initiatives are joined up and get connected. And one of the big observations I always make, there's no shortage of great initiatives in Africa. The big problem is always scaling. And the real issue is scale. And so what we've got to do is find the mechanisms to help get the multiplication effect. That's what really matters, I think. And that's where I think big companies and also governments can really play a role.
Does anybody want to add to that?
I mean, I'll only talk about ourselves, and maybe other companies have done much better jobs than ourselves. But I think we ourselves were so focused on our quarterly results, we're under pressure from shareholders, share price, that honestly we have not done well in this area. We've done some work. It's partly our failure, the environment we live in, and that's why we had a chat just beforehand. And I was telling her, I said, can you please chase us? Because that's a failure from our side. I think we as entities, we don't have the time and the knowledge, but we would like to use other institutions like their institutions to educate us a little bit more. Now, maybe other companies are more educated than my company, but definitely an organization like us, we have the depth, we have the ability, the strength to support, but we need somebody to educate us and help us out.
So, just going to add, I think where the markets are good is in taking advantage of market failures or market gaps that provide profit opportunity. Okay, so for example, the development of Equity Bank in Kenya or the development of Capitec in South Africa was basically providing low-income services where the banks were absent. And they've made big business opportunities out of effectively servicing those areas. Private healthcare, even private education is emerging as an area of fulfilling market failure. But where the market is not good, and I think that's where the question was trying to get to, is where there's no interface between the business sector and civil society. Civil society is completely, there's a divide and there's a gap, and that gap is not going to meet. What are the ways? And the last thing the questioner wants to hear about is corporate social responsibility. Because everybody's going to say, well, our 1% is going towards dealing with the poor people. The fact is the world has to face up to where I started off, that inequality and unemployment is a global phenomenon that needs to be addressed. And growth in and of itself at this point in time is not the answer to that problem. Because growth at the moment, there's lots of very interesting pieces being written about ways in which effectively economic growth are not advancing the inequality problem. They're growing the gap between the poor and the wealthy. And South Africa, for example, is a case in point where we've made tremendous strides in the last 20 years. I wrote a report called 2 Decades of Freedom about it. But the fact is the Gini coefficient has grown. And it's grown because the wealthier have got wealthier at a larger pace than the poor have got less poor. It's fantastic that the poor have got less poor. And it's fantastic that the wealthy have got wealthier. But we need to learn to close the gap. And that's where this global phenomenon of unemployment and inequality has to come up with some new tools. And the reality is we don't have the answers.
Thank you, Colin. Got a question over here?
Okay, my name is Angela, and I'm Nigerian. I want to put it to Mr. Mohammed. You talked about privatization being one way to inclusion, but when we look at privatization, especially in Nigeria today, we see that it's the same rich people buying up the companies, and it's not really getting into the hands of the people, of the masses, so to speak. So I guess the question back to the panel is, how do you ensure that a process of privatization goes to the people so that you can broaden this market, like you alluded to, that we still have a very small market, especially looking at Nigeria and other African countries, if we take South Africa out?
I'll make you laugh, because when I went public, that's one thing I wanted to do. So I had 250,000 shareholders. But what I did, I really did minimum per person. Now, today I have 50,000 shareholders. And the reason was that all these small guys, the teachers who invested 10,000 with me, I think after about 3 months, 4 months, they sold it at 20,000. That's good. At least they made 10,000 more in 3 months' time. But that's going to be a global issue. Now, keep in mind that in America, 1.8% of the population, they own 55% of the wealth. So let's also be realistic. I mean, let's not talk too much about inequality. It's a fact of life. I mean, and if you talk about 200-year-old democracy in America, the most democratic country in the world, I'm glad they have 2 political parties out there, they'll be killing each other. They still have that issue. So it's an issue that we'll debate, we'll try to fight, we'll try to put solutions. Some will work, some will not work. But I really think that to answer your question in all honesty is that I think if there's a system of governments that looks after social services, and I like what you said about all the hard and soft infrastructure, we invest in education for that type of people. We have organizations that are responsible towards the society and uplift these people. And there is that new god, Google, because they're going to go into a different world and do business in a crazy way, they'll make it somehow.
We've got a couple of minutes left, so Prime Minister.
I will be short.
NBC.
When we make the privatization in Côte d'Ivoire, there is a share of the capital given to the individuals of the country. Let's say you can decide that you go through the stock exchange and you give, let's say, 20% to the individual, local individuals. So that's one of the way to solve the problem. Thank you.
My intervention to Angela is, the kind of entities that we are privatizing today need souls for them to work. It's not because we just want to privatize, we want them to work. The option that would satisfy you would have been to list them on the stock market, and you have thousands and thousands of people picking up those stocks, and not one person takes responsibility for making sure that they work. The model we have adopted of, getting people who have the deep pockets and those who can blend their own personal investment with attraction of debts from wherever to take control, but we must then ensure that we have a framework in place that forces them or encourages them to list after dealing with those issues. But having done that and having adopted that model, the question then that I think should be asked is, what then do we do with the proceeds of privatization? I think that is something that the government needs to put back into dealing with the issues that encourage or discourage financial inclusion or encourage exclusion. I don't want to use financial in this inclusion sense because it's not financial. You need to find something to bring these people back into the net of people who can sustain themselves.